All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're continuing our market breadth, market analysis playlist. All right, and today we're going to talk about the put call ratio. So we have, ticker symbol P call right here. All right, and then we've got the S&P 500 index, the SPX down below. All right, we'll go over how I like to use this. And show you guys how there's different buy and sell signals, okay, based off of this, right? And really just break everything down for you guys. So I think you will enjoy today's video. I think it'll be a good one, and we'll just continue moving forward with this series. We're also going to define what the put call ratio is, and then go over how it can be used as a contrarian indicator. Okay, so as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer, and we'll go ahead and get started with the video here. Now, understanding the put call ratio is calculated by dividing the number of traded put options by the number of traded call options. So a put call ratio of 1 indicates the number of buyers of calls is the same as the number of buyers for puts. However, a ratio of 1 is not an accurate starting point to measure sentiment in the market because there are normally more investors buying calls than buying puts. So an average put call ratio of 0.7 for equities is considered a good basis for evaluating sentiment. So a rising put call ratio, or a ratio greater than 0.7 or exceeding 1, means that equity traders are buying more puts than calls. Now, remember, put options are basically bets that the stock market is going to go down, and call options are bets that the stock market is going to go up. So this suggests that bearish sentiment is building in the market. Investors are either speculating that the market will move lower or are hedging their portfolios in case there is a sell-off. Now, a falling put call ratio, or below 0.7 and approaching 0.5, is considered a bullish indicator. It means that more calls are being bought versus puts. Now, the data used to calculate put call ratios are available through various sources, but most traders use the information found on the SIBO Options Exchange website. Now, I like to use thinkorswim, so you can actually, get those in thinkorswim and just take a look at it through there. There's other, platforms you can use. Thinkorswim is free. You guys can use TradingView as well. But something important, all right, is that the put call ratio can be an indicator of how the market views recent earnings or events. A ratio at either extreme suggests an overly bearish or an overly bullish sentiment, which brings us into how to use it as a contrarian indicator. So contrarian investors use the put call ratio to help them determine when market participants are getting overly bullish or overly bearish. An extremely high put call ratio means the market is extremely bearish. Now, to a contrarian, that can be a bullish signal that indicates the market is unduly bearish and is due for a turnaround. A high ratio can be a sign of a buying opportunity to a contrarian, and an extremely low ratio means that the market is extremely bullish. A contrarian might conclude that the market is too bullish and is due for a pullback. No single ratio can definitively indicate that the market is at its top or its bottom. Even the levels of the put call ratio that are considered extreme are not set in stone, and they do vary over the years. But typically, investors compare current ratio levels to the average over some period of time to gauge if sentiment has changed recently. If the put call ratio has fluctuated in a tight range and suddenly bumps higher, traders might see this as a sudden increase in bearish sentiment and make their moves accordingly. So the ticker symbol $P call is going to give you the put call ratio for the market, okay, for all OCC options. Now, up top, we've got red, okay, and down below, we've got green, all right? These are some of the levels, right? And then, in between here is going to be white, right? And this is just the way I have mine set up. Yours won't look like this. You'll basically just see the little line here. All right. And I just do this to make things easy for visuals, right? And I like to have the S&P 500 right below it. And it really helps me out. Now, you can specify the put call ratios a little bit more, right? So if you do $PCSP, this is going to give you the put call ratio for all S&P 500 constituents options. And so what I've done here is I've basically marked, okay, in black all the times on the chart that we come down into this green area and all the times that we come up into the red area. And then I've put in a, a contrarian signal there on the bottom on the S&P 500, right? And so, for instance, if you take a look at this line right here, we come down into the green, and this is basically saying that, hey, investors are getting a little bit too bullish, right? This is using that contrarian indicator, right? And so you see we put a red, sell signal here, and sure enough, the stock market goes down. Now, something also that I want to bring to your attention is notice the trends, okay? And so what do I mean by that? Well, take a look here how the put call ratio is in an uptrend in this period here, right? It's going upwards, right? It's making lows, higher lows, and higher lows, highs, and higher highs, and higher highs. Right. Well, what do we see the S&P 500 in? A downtrend. We have highs, and lower highs. So we see the S&P 500 is in a downtrend here, while the put call ratio is in an uptrend. Okay. So those are some of the most simple ways to use it, in my opinion, is, I like to use it as that contrarian indicator. All right. When it's in the white, I'm just paying attention to the trend of the put call ratio, right? And if the trend is down, this usually means that the stock market is in an uptrend, right? And we can see the stock market in this uptrend in this period here, right? And we can see the put call ratio in this period here. Now, 0.6 and 1 are the levels that I use. So once we come to 0.6 and below, then I'm looking as a potential contrarian indicator that, hey, maybe the stock market's getting a little bit too bullish, and maybe the market could be due for a pullback. All right. It's not always going to work as 100% sell signal, right? Nothing's ever going to be 100% correct, right? If you take a look at this signal here and you take a look, right, the stock market actually still continued to go higher in this period. All right. So that is possible and that does happen. But then if you look, after we come back down into the level again, that's actually when we got another sell signal and we see the market did actually pull back. Now, it's never going to tell you, hey, we're about to start a downtrend that lasts, 5 days, a downtrend that lasts 5 months, a downtrend that lasts 5 years. It's more of a little bit of a shorter term signal. Okay, it's not something to live or die by, but in my opinion, when combined with many other things, okay, which is why I have, the whole market breadth playlist on my YouTube channel. There's many good ways to measure, right, the market breadth in the stock market, as well as, if the market is risk on or risk off. Oftentimes you find divergences. Oftentimes you find these contrarian indicators where the market's too bullish or too bearish. And when you really combine all of these things together, it gives you a really great way to dive under the hood of the market and really see what's making it go. Now, hopefully you enjoyed today's video. If you did, smash that like button, subscribe to the channel for more. If you're new, I actually started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free valuable trade ideas. I try to put in 1 to 2 every single week, as well as free valuable finance content and trading content as well. Okay, this is what the trade ideas will look like, highlighting the chart conditions, everything that we're looking here on the chart, show you guys the chart itself, right? And many of these trade ideas have worked out very well. There's a website associated with it, so you can go back and read some of the previous newsletters. You can see that, if you take a look at some of the most recent ones, Teladoc went up over 14%, PayPal went up over 10%, Rivian went up over 40%. These are all after the newsletter was published. Okay, so check that out. Raytheon RTX was one of the most recent ones. You can see here someone talking about in the Discord, oh, hey, do you have RTX? My January call options are up 88%. Now, those actually went up a lot more than 88%, but you can see right after the newsletter came out, and this is what we were looking at on there, the stock went up very, very nicely. Okay, so if you want to join the Discord, I'm actually running a promo code for January because it's a new year, right? And, I know there's a lot of people looking to, start investing in the stock market, start learning how to trade. And promo code JAN24 will get you into the Discord for just $1. Okay. So, we talked about some of the trade ideas just now. We talked about PayPal. We talked about Teladoc, but we didn't go over Toast. We didn't go over Carnival Cruise Lines, SoFi, Palantir, as well as many, many other ones. Right. So if you want access to all of the different trade ideas and analysis that I put out, everything that I'm looking at, you guys can join the Discord, and in there you actually get custom scripts, indicators, as well as many other valuable resources. So hope to see you guys in there. And that's it. Okay.